Hi, everyone, and a very good afternoon to all of you. Very warm welcome for today's webinar on Bitcoin halving insights, past, present, and future, proudly brought to you by Orient Futures Singapore and Asia Pacific Exchange. I'm Roger from Orient Futures Singapore. Please be advised that this webinar is solely intended for educational purposes and do not constitute any investment advice in any form. Before we start today's webinar, we have Sam, Head of Global Markets and Strategy at Asia Pacific Exchange, to say a few words. Sam, the floor is yours.
Hi, thanks, Roger. Yeah, let me share the slide. Hi, Roger. Just a quick check. Are you able to see my slides in full screen?
Yes, I can see.
Okay, we shall start. Yeah, let us do a simple introduction about our exchange. So Apex Asia Pacific Exchange. I'm Sam. I'm the sales and marketing the head for the global markets and strategy. So let's talk about this a brief intro about our company. So back in 2018, we actually gotten the license of the approved exchange and approved clearinghouse. We have launched a series of products is on covering the assets of digital assets, financial, commodity, precious metal. Yeah, this is a timeline for our product. So back the first product we have launched back in May 2018, and then subsequently every year we have a new products like including fuel oil, currency pairs, Bitcoin, silver, and gold trial contract recently. So these are the upcoming product pipeline that we have. So we're going to have one Bitcoin futures, 10 Ether, FX, and silver trial futures. So let me do a quick introduction about this product on Apex BTC product, since today's topic is about Bitcoin. Yeah, so this is the contract spec for our contracts. So we have a money futures, we have perpetual futures. So for the money futures, we have a 21 trading hours on 5 days on the weekdays. And the margin is about 20 to 25%. And then we have a 6 consecutive months listed. Like for example, now the spot month is actually April contract. And then subsequently on every 6 on the 6-month basis. And then for the money futures, it actually settled based on one of the index that we have used on Compass. So this is one of the partner we have on the benchmark, on the Bitcoin benchmark that we have coming from Europe. So it actually settled at 6 p.m. Singapore time, which is the ends of the trading hours for the day. So we have this perpetual futures contract as well. So similarly, it's actually settled using the same index, same benchmark, which is on the Compass, 6 p.m. too. And for the perpetual futures, there's no expiry. So that's why it has actually this funding rate and funding fees, which is actually quite commonly used in the crypto industry. So that is actually the difference between the perpetual futures contract versus the underlying index. So let me do a bit of intro about this funding fee calculation. So it depends on the overnight positions that this include a T session and T+1 session. So at the end of each session, if there's an open position, it will be actually used to multiply by the contract multiplier, which is 0.05 Bitcoin per contract. And then we times the underlying settlement price, which is at 6 p.m. and then times the funding rate. So this is how you get to the funding fees. And then let's say if it's a positive fee, means it's a long position you have to pay for the short position, and vice versa. So let's go through one example. So I'm taking this day on the 23rd of February. So you see that the funding rate here is 0.07709%. So let's say you own long position on the 25 contracts. So the calculation for the fees will be 25 times the contract size, which is 0.05, times the benchmark price, which is the price of the benchmark at 6 p.m. that time, and then times the funding rate. So this you get like this is a fee that you're going to pay as you are the long position, and it's a positive rate. So out of these 25 lots, you're paying this $49 to the seller. So on the funding rate is actually being updated on our website on the real-time basis. So you will be able to check it on our Apex website. So what are the key features for our product. I think that we summarize it in 6 points. So one is about the time zone. So it's actually Asian time zone. So the settlement is at 6 p.m., which is the Asian closing hours. And then the contract size is actually smaller. So we are, this contract is about 0.05 Bitcoin, which is about 3,000 to 4,000 per lot currently on the contract value. And then there's no expiry. It's a perpetual futures contract. And then on the exchange side, it's actually it's more on the regulated product. So I mean, in crypto exchanges, a lot of them are kind of like unregulated, but on Apex, it's actually regulated by MS. So this gives a bit of assurance about the safety of the contracts. And then it's being centrally clear with Apex as a clearing house. So there's a segregation of funds from Apex Capital. And then it's because this is an exchange traded product. So actually, there will be always a buyer and sellers, and then exchange will become the central counterparty to the transaction. So this will actually ensure there's a safety, the performance of the product. And then the last but not least about the point, no auto liquidation. So if you're familiar with crypto industry, there's always using auto liquidations. Like for example, if there's a margin shortfall due to the spike or the high volatility during the day, your position may get liquidated due to the price movement. But for Apex contract, because we used a traditional derivative product, so it will be always a margin call. So it will allow the clients or the brokers to top up margin when there's a shortfall. So just now touching about this benchmark. So this is the benchmark we are using is called Compass Crypto Reference Index Bitcoin. So you can actually check more about the information about this index on our web on the Compass website. So it's actually a regulated benchmark provider in Europe. So it's licensed under EU BMR. Yeah, so this actually they have their own methodology to decide using a basket of Bitcoin trading pairs on different exchanges. So they were based on the time series of the trade data to calculate the index prices. And this index itself is a real-time index. So you'll be able to check from some of the market data vendors that carry their index. So there's a quick comparison between the Bitcoin or Apex and with other exchanges. So if you compare Apex and CME, I think the difference between us and them is about the contract size and also about the Apex actually offer both monthly and perpetual futures. And if we compare Apex to other crypto exchanges, it's about we are regulated and then there's no auto liquidation as I mentioned. So we implement this margin call model. So whenever there's a shortfall margin, there will be always a margin call. And then in terms of the risk that on the crypto exchanges, is always have a high counterparty risk and also the risk of loss of the funds whenever you keep your funds or coin with the crypto exchanges. Before I end the presentation, I would like to actually introduce also our new product on the Apex Gold products. So this is a recent product that we have launched on the Gold troy ounce contract. So basically, it's actually the same as what we have for the Bitcoin. It's a perpetual futures contract. There's no expiry. And we have this rollover fees incorporated. So you can understand it as a swap if you are familiar with the OTC Gold market. So currently, we offer one of the lowest margin, which is about $28 for the troy ounce, one troy ounce. So it's about 3.3%. And then for the settlement, we are using cash settlement against the LBMA. LBMA, I think most of people are familiar. So it's about the London spot market for the gold. Yeah, so we have a license with them to use their prices to settle on our contracts. So these are the summary of the 6 points that on this new product. So there are 3 contract sizes. We have 1 ounce, 10 ounce, and 100 ounce. So it's actually catered to different client needs or different sizes. And then there's also a high leverage on the product. I mentioned it's about 3.3% of margin. No expiry. There's no expiry. So clients can actually open the position and close and choose to close their position whenever they want. The fourth point, I think, is one of the most important point, which is there's no spread on the swap rate. So we know that you are trading on the most of the OTC market, you are paying higher in terms of the swap rate, and if you are going on long position on the gold, you are going on the short position, you are receiving less. So giving one example, like currently USD interest rate is about 5.5%. So you probably have to pay about 6 to 7% if you are going to long on the OTC market. And then if you are short, you're probably getting a 3 or 4%. But on the Apex, it's different that we don't charge any spread. So it's a zero spread. So the buyer and seller, there's always the swap payment between buyer and seller. And it will be the same rate for buy and sell. Yeah. So the fifth point is about LBMA. So we are using AM prices, which is the it's our evening time about it's 5:30 or 6:30 using their prices from the LBMA. And then the last but not least about the trading fee, which is one of the lowest in the market. Yeah. So if you have any questions about the product on Apex, you can actually reach out to us on our mobile, email, or actually you can also contact Orient Futures, who will be able, it's actually our premium members who will be able to advise you on the contract as well. Yeah, with that, actually, it's come to the end of my presentation. I'm going to pass over the slides to Coby to talk about his.
Yeah, hey, thanks, Sam. Okay, let me just do a quick share of my screen. Okay, so hi everyone. Okay, yeah, so thanks everyone for joining in. I think in the middle of your work day to understand a bit more about Bitcoin. But as you can see from the past 6 months, I think even I would say 6 months to a year, a lot of things have changed in the whole Bitcoin cryptocurrency landscape. Yeah, so from I think probably this time last year or even earlier, like early Jan 2023, you've seen the cryptocurrency market is still kind of like vilified by everyone, you know, in terms of I think Bitcoin, Ethereum, I think were like in recent year lows, fresh out of 2023, FTX, Luna, and whatnot. But fast forward 1 year later now, you see Bitcoin ETF, you see BlackRock's into it, Fidelity's into it. I think a number of traditional finance, huge, large Wall Street finance institutions are also in it. So yeah, I think it's really kind of like helpful to kind of understand a bit more about Bitcoin and how things have progressed as you go along. And halving, I think that's what I think the topic here is about, the Bitcoin halving, and it's happening just 3 more days from today. Yeah, so what we're going to do later on is to kind of compare a bit on how the past halvings have been like, and look a bit at at what could possibly hold in the future. Okay, disclaimer: whatever I'm saying later on, if I just do drop any names and whatever, like non-financial advice, we're just sharing, sharing different kind of like case studies and all. Okay, maybe just a bit of an introduction about myself. I'm Coby. So currently, I'm the co-founder of Ranger Finance, which is a perpetual aggregator on the Solana ecosystem itself. Just launching, about to launch in May. So do check it out on Twitter. Also, at the same time, I'm the head trader for the spot OTC desk at blockchain.com. So what we do is that pretty much same as I think for equities and all, I think the professional traders within the banks. We do OTC trades, OTC flows for cryptocurrencies only on blockchain.com. Yeah, so I think in terms of like a monthly counting, we process billions of dollars worth of like flows from not only from Bitcoin, Ethereum, but all kinds of like other tokens too. Yeah. In addition, I think I was a part of the first batch in, I think was SIM. I think they had this IBM certified blockchain practitioner kind of cert. I went to take the cert there. I think it was kind of helpful in understanding a bit more about cryptocurrencies and also at the same time blockchain, how it works and all. Yeah. And on my side, actually, I do, I'm a founder of a sort of crypto trading community. So for me, one of the things that I really do believe in is within the blockchain or even the digital asset space, I strongly believe that no one person would have ultimate full knowledge of everything. There's so many different things. NFTs, you have ordinals now, you have Bitcoin, you have other kind of like smart contract-based kind of cryptocurrencies. And within itself, there are many different chains also. So yeah, it is always helpful to have a network of information for everyone to kind of share and learn. Ultimately, it's still collaborative and everyone kind of understands more. All right. So the order of how I'll go through later on, you'll be like, I'll say the introduction of the halving, the purpose of it, and also compare. The coming halving on Saturday, if I'm not wrong, will be the 4th halving. All right. There have been past 3 halvings, so we'll take a bit of a look into the past 3. I think the past 3 halvings, how it is been like. Yeah, and also the differences, is there any difference or is it all very different? Okay. Also taking a peek at the institutional side of, I think, the Bitcoin and cryptocurrency digital asset landscape, how it has changed, and now what we do see now, possibly going to the future, in terms of like even future ETF developments and also other possible developments within the institutional cryptocurrency landscape. And finally, any questions, just feel free to ask. Later on, like feel really anything. No question is too simple or whatever. I think anything, just feel free to ask. If I can help, I wouldn't say I know every single thing under the sun, but if I can, I'll try to answer you on that. Okay, so the Bitcoin halving is on the 20th of April, 2024, which is just a few days, like 3 or 4 days later. Now, currently, I think Bitcoin is like 64,000. Yeah, Bitcoin is 64,000 now. Maybe just a bit of like a poll wise, what do you think will be the price of BTC by the halving? That means by Saturday itself. Okay, so let me just share this link itself. Hold on. Yeah, so if you can see my screen now, yeah, I can just take a look. Yeah, you can see the screen now, right? So maybe use the Slido QR code over there to just kind of like take a look at and maybe just share, like what do you think will be the price of Bitcoin by the halving itself? Maybe by this Saturday. What do you feel can be? Hopefully it's not what this first person kind of typed out, $100 like that would be, I don't know, 10 years ago, and last time it was $100, I think. Yeah. But I think fun fact was that I first heard about Bitcoin in 2013. Yeah, so that's my friend actually telling me 2013 Bitcoin. Yeah, like he's getting into it. It's about $100. Too bad. No, I was still back then. Still like, I'm going to trade my equities and everything. Bitcoin is still very niche. I was like, please don't tell me about this internet money scam. I don't want to. I'm not going to try it at all. And then within 1 year, went to $1,000. Like, too bad. I didn't know how to chase the price. That's why I only finally got into cryptocurrencies only in 2017. So I just missed this whole 4-year gap. So yeah, as you can see over here, right, 60,000, 70,000. I think that's pretty much logical. I think that's won't be surprised if it does hit either 60 or 70K. Hitting 100K and above, like 1 million. Okay, I think that's a bit of a stretch. Even 80,000 may be a bit of a stretch, because from now 3 days, if they move to 80,000 over 100K, that's quite a few green candles for the next 3 days itself. So that'll be quite kind of scary. So as you can see, I think there may be a wide range of how prices can be. Even if you swing down to 60K or 42K, that's still possible. Yeah, especially now, whatever's happening in macro and geopolitical side of things. Yeah, but this is by this Saturday, by halving itself. All right. What about 1 year? What do you think will the price of Bitcoin be 1 year after the halving? That means April 2025. What do you think would be the price? Do you think it's going to go down, or do you think it's going to continue going up to 100K? I think the other time there was another person who said like, oh, it may go to $1 million or something like this. Funny thing about this, if you say Bitcoin go to 100K just or even 80K just 7 years ago, I think a lot of people were laughing at you. Like, what? How can it be? But now you look at it, you say Bitcoin go 100K. Seems kind of possible, not that far, right? Yeah. So as you can see here, 150K, 100K. I'll say most of the numbers are biased towards the upside of it, which is later, if you can see, compared to the past halvings, it's not so ridiculous in a way. I think that's pretty much in line with past trends. Yeah, 120K, 80K, 150K. So theoretically, although the total supply is capped for Bitcoin, but the supply production per day, per block actually is half. So many are saying, oh, maybe the price will double. I don't know. Anyone's guess is as good as mine. Yeah, so as you can see, a lot of numbers are biased towards the upper side. But as you know, like in the digital asset cryptocurrency space, anything can go. Like if you look at Ethereum, Bitcoin last time was like $5 or $2. Within the first year, the trading itself, actually it did drop like 50 to 70%, right? 50 to 70% at the same time, it's kind of like on hindsight, if you look at it now, it has been an uptrend all the while until now. Yeah, so like 50, 70% actually, like in an uptrend for a cryptocurrency, it seems quite possible. That's the funny thing about it. Yeah. So what is the halving actually? So Bitcoin, if you look at it, I think the creators behind Bitcoin, when they created Bitcoin, what they wanted to do was to actually address some inflation concerns, right? And at the same time, like they do not want it to be, for example, like US dollar, if you compare to traditional currency, or even any kind of current fiat currency where the government can just print money. So initially your total amount of US dollar in circulation maybe 1 trillion. Suddenly 2 years later, how come become 5 trillion rate? Because the government is printing more money. Yeah, so I think this is something that they want to address, that in the longer run, this constant expansion of supply it won't do well for the value of the money you're holding. Yeah, so that's why I think that's one of the spirit of why Bitcoin was kind of created, to have a decentralized kind of like form of money, electronic money. Decentralized meaning there's no government, there's no Bitcoin team that can say, hey, let's do it now. Let's increase the supply to like 400 million tokens or something like this. No, there isn't such team like this. A lot of things, like eventually, like if anything it has to go through by voting, but of course now I think it's a bit difficult for that. So yeah, one of the mechanisms they built in is called halving. Halving meaning every 4 years, about 210,000 blocks, which is about 4 years, the production rate per block. That means miners, when you mine, right? Let's say per hour you mine, that kind of thing. After April 20th, the amount of Bitcoin you get will be half, about half. So that's why I mean by halving, production rate actually being half. So if you look at it, not exactly good for miners. If you look at it, especially if the Bitcoin price don't go up. Yeah, so later we can look a bit at what the miners have been doing to kind of like ease out, plan ahead in terms of things . Yeah, so this is what they mean by the halving in a very simple nutshell . It's a system that they built in to maintain scarcity. Yeah, because if you're an issue, let's say each block is going to produce 1 Bitcoin per block, kind of thing, or over like say 10 years, 20 years, like I don't know, we may have finished issuing, but if you halve it every 4 years, so so the supply itself become more and more scarce really. New Bitcoins being created every day becomes more and more scarce. But at the same time, demand, if it maintains or if it keeps going up, that's when there's an upward pressure in terms of price. Limited supply, same demand or increased supply, increased demand as opposed to like limited and downward trending supply economics. Definitely I think for that greater demand goes up with a greater price itself. Yeah, so yeah, it's more of inflation like the Bitcoin has a fixed number of Bitcoin within the I think itself. It won't be going up, and also to maintain scarcity itself. So when you're holding 1 Bitcoin, you won't be so afraid that like 1 month later someone's going to say let's double the supply, then wow, jalat. Oh no, like in terms of our holding suddenly half already in terms of value. It's similar to how when you're holding stocks and shares, suddenly the company like issues out more new shares, you get diluted. Yeah, in this case it won't happen. Yeah, so it's a comparison to traditional currencies, traditional financial products. Yeah, and yeah, as production halves, Bitcoin becomes more scarce in terms of supply wise. The Bitcoin daily new supply becomes more and more scarce. As you can see, also the past 4 months, I think when the ETF started kicking in, a lot of Bitcoin has been locked up within the Bitcoin ETF. At least for now, 3-4 months is still locked up. Of course, after 1 year or like when the flows start coming out, I think that's another different story. Right. But at the same time, you see after April 20th, you may ask yourself like, hey, the miners how? Bitcoin suddenly the amount of coins that they mine every day suddenly up half. Yeah, so that's why for the past 3 or 4 months, later I'll show you a chart. The miners actually have been forecasting some of this. So they've been selling some of their Bitcoins already to kind of like be able to forecast and meet their OPEX needs for the rest of 2024 or maybe some of 2025 even. Yeah, so they have done a bit of budgeting really. So later on you can see it. Take a look at the chart. Yeah, so miners, yes, I think they would immediately face a potential decline post halving. Because no matter how many machines you have, 1,000, 2,000 machines, you'll be producing like 10 Bitcoins a day. But after the halving, after this Sunday, suddenly become like from 10 Bitcoin become 5 Bitcoin, or even 4 or something like this. Definitely there'll be a revenue drop. Why? Because the price of Bitcoin will not immediately and suddenly double after that also. Yeah. So price remains the same. The amount of Bitcoin produced dropped by half. That's where you have a sort of like a revenue decline. Yeah. So I think I would say in the next Q2, Q3, I don't know, maybe even Q4 itself. I think the revenue for some of these miners like Mara and all this, maybe a bit, numbers wise, you look at it compared year on year, quarter on quarter, will probably definitely be a decrease in that sense. Unless of course Bitcoin suddenly just 2 times, 3 times again, then that's a different story. So yeah, you can see that actually the miners have been forecasting some of these. So you know that the CFO probably planning ahead. You look at the right side of this chart. All right, right side of this chart actually shows the first part of this year, the first quarter of this year. The blue line represents the miner reserves. That means how much the miners have been stockpiling Bitcoin. All right, if it's going up, means the miners have been just keeping and keeping. They're not selling. They just keep a lot of Bitcoin. Yeah, as you can see, part of 2022, you know, most of the time they've been just keeping a lot of Bitcoin. But in 2024, when actually the price broke 60K, 50K, and all this, right, they've been slowly selling off already. It's just mainly to forecast their Bitcoin needs. Yeah, so you see the blue line has been going down quite a bit to, you know, like till it is actually lower than the 2021 low for the number of Bitcoin in miners reserves. And that coincides with the white line when the price has been going up. This is not to say the miners are the smart money. For them, it's more of like a business need. You know, that they feel that they should slowly sell some coins. They're not trying to pick top or bottom, but they're slowly selling some coins to meet their business need. So, you know, they can weather the storm when, you know, the supply goes down, but price doesn't immediately double up. Yeah, so that I'll say the impact, that could be the impact of the markets. And I'm pretty sure the markets have also kind of like affected in some of that, you know, like the pure revenue decline in terms of, I think, like some of these miners that are listed on the Nasdaq and all this. Okay, so like what I mentioned, there have been 3 halvings last time. So the first halving, back then it happened in 2012. So you won't ever see this price really. Look at it, Bitcoin out that time, $5, $12, even $230. You'll never ever see this price really. I would say maybe a 0.5% chance you ever see this price. If you do see it, probably something's wrong. But yeah, I think back then that was just, I think, quite fresh after Bitcoin first came to the market itself. November 2012, that's when the first halving happened. That was $12.30. Already it's more than doubled from, I think, 6 months ago. And after that, in the next 12 months, what happened? You went to do like a near 20x. Near 20x to about $230. Yeah, as you can see from this chart, it's a bit parabolic. All right, but remember back then, Bitcoin is still quite new, it's quite niche. Volatility is super high because, you know, you don't have a lot of players in the market at the moment. That's why you see the volatility crazy. You went to $230. It swung back down to like what, $60, $70 itself. Yeah, see, this kind of dip is not exactly very uncommon, especially back then. So this is actually, this Bitcoin back then is moving, although like a crazy penny stock, or even like a altcoin, like a meme coin in the current crypto market terms. Yeah, but net, if you look at it from pre-halving, or even from halving itself until like 6 to 12 months after that, it's been an uptrend. Price is kind of uptrend. Of course, in between there's swings up. Okay, second halving took place in 2016. All right, September 2016 itself. So same thing, you can see the same trend. I think 6 months before is at $450. Halving became $650. At the end, after 12 months later, it hit about 1,001, 1,002 at least. 1,001, 1,002 per Bitcoin. All right, but as you can see, once again, the halving itself doesn't mean that Bitcoin immediately shoot up after the halving date. Why? Because everyone knows about halving. Before that, they have been probably positioning to the halving and, you know, doing all that's needed really. Immediately after halving for 2016, within a month or 2 months, actually the price dropped. Yeah, from 600 plus, near 500 plus, 600 to drop to near to 500 before it starts to consolidate upwards again. So like looking at this, even like looking at this, you know, like a lot of times when you look at risk assets, for example, such as this, in some form investable, it's sometimes maybe better to take a longer, bigger picture view. If you want to trade the halving, you have to buy on the halving thinking it's going to go up, you're going to make a trading loss. But if you to zoom out, you know, and you're like kind of like DCing, and those who are DCing and accumulating over the year, good for them, you know. They're not exactly subject to volatility. Actually, they believe in what the core nature of Bitcoin is like. Yeah, so same thing from start to end, plus minus 6 months before and after halving, the price has been uptrend. Third halving, that happened during COVID. Yeah, so you can see, from the first time, price actually went about 20 times. Second time, price actually about near double, not really exactly double, you know, 12 months after the halving. And the third time, right, from 8,600 during the halving went to about near 15.7. So it's like below 2x or so. So as you can see, right, you no longer see the 20x that you have in the first halving already. But one thing remains for sure. It is still generally uptrend. When whoever bought before or during, you know, like the halving itself, and they do not buy to just do a short-term trade, they will be better off. by holding it, by DCing every day, the kind of thing, over a longer term. So it's back to the same thing, that you're having a expand period of time, truly believe in what it stands for, and you're just holding it. Yeah, buying, like throughout the years. I think that's where I think all these Bitcoin investors kind of like benefited from it. From 8,800 went to about 16,000. And what's the price now? See, the price now actually like 64K. From 16,000 to 64K, that's a 4x really. Yeah, and then the 16,000, that's only like 4 years ago. That's during COVID. So after the initial onset of COVID. Yeah, so so it is quite insane if you look at it. One common theme that you really do see is that for those who held, like held over long term, if they DCF throughout the years, they would have been winning really. If they DCF since 2012, probably they've retired. They won't be here in this webinar, but they would have been kind of like, like sitting on decent amounts of Bitcoin and in dollar notional terms also. Yeah. And if you do see, I think recently also, I think the whole highlight, I think in the markets have been looking more and more into Bitcoin. Why? Also because of inflation and also of currency weakening throughout, I think, a lot of the world, like in Jap yen. Before Bitcoin in USD terms broke new high, Jap yen actually broke new high already. Yeah. In terms of Bitcoin in terms of Jap yen, Japanese yen. Then if you, I think Norwegian kroner, that's one. I think a few other currencies also one. So like, yeah. So you can see, I think there are more and more countries, I think, I wouldn't say it's a mass adoption yet, definitely not. But I think more and more are being highlighted and looking at Bitcoin as a potential kind of store value, to not lose as much value by holding a currency that's, like subject to a limited amount of easing. Yeah. Oops. Okay, institutional and regulatory landscape. So if you look at this, the past 3 halvings, you look at the 1, 2, 3 halvings here, right? I think there has been, there were some institutions, especially in 2020, institutions, or maybe some financial funds, all this, but none as huge as what we've seen now. Yeah, so if you look at it now, since start of this year, BlackRock, Fidelity, ARK, and all this kind of thing are all into crypto or Bitcoin via their BT Bitcoin ETFs that they have kind of like released, approved by given approval also by SEC . So these are funds, I think like 14 or 15 billion dollars worth have been locked up in terms of Bitcoin. Yeah, so it's quite insane. And like not only the US actually is looking at it, if you look at it, Hong Kong is trying to be ahead of the pack. They did not get the first big spot Bitcoin approval out, but just 2 days ago, they approved both Bitcoin and Ethereum ETF together at once. Yeah, so I think the next thing to really see for this is when will this Bitcoin and Ethereum ETF be actually released lah. Yeah, because they got approval. When will they actually be out in the market for people to invest? And this could potentially pose a very good kind of like proxy for I think even Chinese investors, Hong Kong, Chinese, Asian investors to kind of put their money in. Yeah, by sheer proximity, they know all the different kind of like funds, like what was it, Harvest International and all these well-known names within the Asian side. Yeah, so yeah, this is another big pool that we can tap on. So let's see. I don't know when it's going to be released. It's going to be April or May. It'd be kind of interesting to see how the flows would be like, from the Western side in the US, Bitcoin flows, and also from Eastern side via Hong Kong, in and out. So I think it becomes constantly nice to see the whole balance, of inflow and outflow of Bitcoin over there. But with all this, institutional and regulatory landscape, travel rule is coming hard and fast really. So I think from last year, if you could ask me about travel rule, it is going to be implemented. But now, if you're in Singapore, if you're using Coinbase or I think CoinGecko and all this kind of thing, you see more and more of these travel rule being implemented. What do you mean by travel rule? It's, in a nutshell, means you have to declare all your own wallets. Yeah. So cryptocurrency started out as being like, a bit anonymous one. I have 10 wallets, 15 wallets, you won't know what it is. I just send around that kind. But with travel rule, if you were to send from, let's say, your wallet A into Coinbase, Coinbase requires you to actually declare that wallet that you're sending from is your wallet. Yeah, so this is becoming a real thing really, and it's part of, I think, it's part of the whole MES requirements to be regulated under MES, under the DPT license. They call it the Digital Payment Token license. Yeah, so I think this is coming hard and fast. All those licenses, especially Singaporeans, would have to do it. Yeah. So slowly, I think it's all going to come. The other thing is actually reporting requirements and policies. So you may have companies that are holding Bitcoin, Ethereum. You may have funds actually that are, looking to be an official crypto only fund. How are they going to report to the regulators about it? The requirements needed, and also policies, safeguarding policies, right? What 80% of your tokens that you're holding, can it be on exchanges? Can it be on regular wallets that you have? or must it be 80%? Must it be in cold wallets? That means in your hardware wallets, somewhere that's not connected to the internet. Yeah, so all these actually, I think that a lot of these have a lot of policies coming up already. But of course, we do not have one all-encompassing one yet. So all these are slowly, I think, becoming true. Not only in Singapore or even US. I think even you see Hong Kong, Taiwan, Thailand. I think Thailand is also one country where it's very open to cryptocurrencies. All these are coming quite quickly, quite hard and fast, really. So we really have to anticipate it, right? And the last thing, I think that has been the conversation all the while for the past 2 or 3 years, is that whether digital assets, these digital assets like Bitcoin, Ethereum, what are they? Are they a security? Are they commodity, or what are they? Or like, say, oh, just like a commodity, like a digital gold, for Bitcoin. That I would say is still not a very clear-cut answer, because it may vary from digital asset to digital asset. So like Bitcoin, yeah, sure, it can be a commodity like digital gold. Ethereum, yes, someone from the SEC previously did mention that Ethereum is not a security. So at least that's clear. But what about things like Solana? I don't know, even Dogecoin is quite big, or BNB, or some other coins, Avalanche, or all these other coins. Are they a security or a commodity? It is not exactly 100% set in stone yet. Yeah, so actually, at this one line, actually is one of the important parts in determining future ETFs. So like if you want to look at like future ETF developments, right? Yeah, firstly, that digital asset has definitely, I think, high chance has to be not a security to begin with, or at least ascertained by some leading regulator. That's not security. Yeah, so that's the important. If not, yeah, there's a whole new thing that you have to come regulate it, and licenses they have to get and all this. Firstly, I'm not really sure what kind of licenses they have to get, but yeah, they have, it's all under a different kind of regime we're assessing it. Yeah. So if you track the whole ETF development journey, it's been quite crazy also, because it's been for the past 1 year. Every time you have a Bitcoin ETF deadline, back then when you know of this deadline coming, like it's going to be delayed. Doesn't matter. You just come and go. You just push around another day, 2 months go, 2 months later, 2 months later, until end of the year when BlackRock suddenly came and said, "Hi guys, I am going to submit official spot Bitcoin ETF kind of application to." Then everyone's like, "Oh, BlackRock is here." Means high chance, even better chance that within the next 6 months it's going to get approved, and that's what happened this January. Yeah, so you can see it's like in the US, I think the power of these kind of huge financial institutions that they have over there, like a 13 trillion, I don't know how many trillion dollar fund coming in, or even 2 of them coming in, will, in a way, the power of the sway that they have over there. So that's why for Ethereum itself, the next deadline to watch out in the US is May. I think May 23rd or May 28th. That's my first deadline for, I think, Vanguard or one of the Ethereum ETFs. Watch out for that. But of course, the same thing applies, and people will be looking at it like, Big BlackRock haven't applied it. Doesn't mean it means, like high chance won't be approved. Honestly, from my point of view, is that Ethereum won't be as easy to be cleared, due to some legacy issues also. But I think it stands a decent chance within this year for Ethereum ETF to be cleared within in the US itself. May be a bit hard, honestly, because if it's going to be launched in May, end up demand for Ethereum is going to cannibalize each other together with the demand for Bitcoin ETF. Yeah, so I think that's also another consideration. But one, I wouldn't say unexpected, but one kind of like development that came up 2 days ago was that Hong Kong came and said, "Hey, we approve our Bitcoin ETF, and we are the first to approve Ethereum spot ETF." So I don't know if that's going to be a West versus East kind of race in a way. Like, I cannot lose face. Like, hey, Hong Kong, we approve ETF. I cannot drag too long for the US. That is actually one possibility that they, that may happen also. But besides Bitcoin ETF and ETH ETF, I think there could be a possibility of other assets coming on also. I don't know, maybe Ripple, XRP, but of course they have their own lawsuit. But for other assets also, I do not know exactly which other assets will have a higher chance to become a ETF itself. I think a lot of people, there's some people that are actually betting on even Solana, via actually the Grayscale funds itself. So maybe one little hint is to go look at existing Grayscale funds. What other assets do they support? And from there, do your individual research into each to see what is, could a potential another new asset ETF be in the next 5 years? Yeah. But what could be next besides ETF? A lot of things. I did mention, of course, Ethereum ETF in the US. That's definitely the one in the pipelines. The other one's actually tokenized funds. Yeah. So you see within the past month, Onto Finance actually worked together with BlackRock to kind of tokenize their BU Idea Builder fund itself. One of the benefits of, I say, hey, why must you tokenize a whole fund? chain itself. One of the benefits, of course, not all, is that everything settlement and redemption, everything can be done final on chain 24/7 itself. We don't have to wait for humans to be up, in the weekend. Everything's just on chain, smart contract based. So I think that's one key benefit, for some of these huge funds. Yeah, Ethereum ETF in the US, and I think the last one is zero knowledge proof. So in the past 1 or 2 years, we've seen probably a few projects that said, "Oh, I'm in the ZK space," like zero knowledge itself. They're promoting the use of that. What it actually is, to put it is simply, it's kind of like to validate or verify. Let's say your NRIC is S, A, B, C, D, E, that kind of thing, or your credit score is like a B plus. How do you verify? Without having someone in the central like MES or something saying, yes, I can say for sure. This one, you don't need any humans on. All right. So I think zero knowledge proof technology, that's one thing where it can be actually a potential game changer in the future, especially in financial compliance and all this. So you have this network where everyone's kind of like data, credit score even, because they track out all your different kind of loans and all this, with response to track credit score, and having ZK proofs online within the chain itself. I think it really does help in strengthening this whole kind of like structure in the network itself. And ZK machines, that's one thing that I do see recently. I spoke to a few people about. It is a bit like a Bitcoin mining machine, but these machines are meant to prove and validate within for these kind of zero knowledge protocols. Yeah, so these are some machines, although it's still not very huge yet, but it's probably something that we could take a look at. Yeah. So with that, I am, like I've gone through quite a bit. I think for Bitcoin, even some parts in smaller, I think coins itself. If you have any questions, feel free to kind of like share lah. Yeah, share within the chat itself, and also
Yes, thank you, Mr. Coby, for your sharing. Yeah, so now we have reached our Q&A session. If you have any questions, feel free to press the raise hand button, and we'll be happy to unmute you so that you can ask your questions directly. Alternatively, you can actually type your questions into the chat or email us at marketing@orientfutures.com.sg.
Yeah. Okay, I saw one question, I think, in the chat group there. From Junyi from HNK Alpha. Mentioned ordinals earlier. What are they? So I think the past 6 months or a year, I think there's been this whole new thing that sprung up. Previously Bitcoin has been just electronic money, right? Electronic money, transfer of money, that kind of thing. That's an electronic payment system. Doesn't really have any smart contract capabilities like Ethereum have. So Ethereum and Bitcoin, Ethereum has the capabilities to build different projects under it. That's why it's like a whole new blockchain to build things. But Bitcoin didn't really have that. So over the past 1 year, I think there have been like developers, I think the team itself, I think people have been pushing for ordinals or even like some new token standard BRC20. So personally, I don't really see a lot of value in all of this. So a lot of like actual value in building a proper actual projects. Even within the Bitcoin ecosystem, a lot of L2 layer tools that that come up is to mainly support like some of these expanded activity with the network. And where all these spike in network activity come from, not exactly 100% from those people transacting more Bitcoin, like to pay stuff or what, but it's more from ordinals. Or even like like some of these like early part of inscriptions, some of these inscriptions where they're trying to mimic NFTs in a way. Yeah, so to put it bluntly, I am not exactly within that space itself. But from what I see, from what I know at the start, is like, I wouldn't say it contributes a lot of it to the entire Bitcoin, to the entire value space itself. Unlike on Ethereum, Solana, that kind of thing, with whatever capabilities there, that kind of thing. Even NFTs, like NFTs, it does serve a purpose, some valuable purpose to that. Even smart contracts for you to build different DeFi protocols. It's like building banks on chain. But for ordinals and even some of the BRC20 inscriptions and all this, like those who are into ordinals, sorry, but I feel that it's like pushing a bit too hard. Yeah, in trying to get more activity within the space itself. Yeah, but those who are actively in ordinals, I think they have made a killing in the past 1 year, 6 months to 1 year. I think they really congrats to those who are really in it.
Oh, okay. We actually have one more question from the chat as well. Okay, what strategies can we use as investors after Bitcoin halving event?
Yeah. So of course, I think when you ask most people, they may just say, just continue to kind of DCA or like like every day just buy a bit of Bitcoin. to get exposure to Bitcoin. So that in the longer run, over 1-2 years, that kind of thing, historically, net you would be up, assumingly if the history holds itself in terms of how it moves typically. But I think one strategy that maybe some of the professional traders would do use is like some of these like funding arbitrage or even like delta neutral based strategies. I guess, if you have access to perpetuals, perps, or futures, I think like what Apex has also. Some of these, not financial advice again, I think some of them when they can actually long the spot Bitcoin or Ethereum or whatever it is, and at the same time they short the same amount. Yeah, some of these traders, they do that. Why? Because when you short and you are playing on the funding rate, especially when funding rates are actually sort of like positive, so the longs will pay the shorts. So if you're short Bitcoin, you'll be collecting fees. But at the same time, you're hedged off because you are actually long Bitcoin on the spot also. So in that sense, I think these are some of the strategies that they actually may play. And also, I think the other one is having not overexposed to Bitcoin or cryptocurrencies. I think that's the right thing to do in a way, and taking a longer term view of looking at it. Don't just 50%, 60% of portfolio jump into Bitcoin, Ethereum. And when there's a market retracement drop, like markets drop 50% or 30%, you'll be like, oh my net worth suddenly dropped by so much. It is naturally more volatile. So factor in the volatility. So like even especially after halving event. But my personal point of view, again, not financial advice, is that after the Bitcoin halving itself, we may see a sort of like sideways or sort of like a slow trend down to kind of like let the market kind of reset itself. But before it starts to trend out again, I wouldn't say it would perform similarly like how past years have been, but there will definitely be some signs of it that either having more stability in the market first. Past 4 months have been quite crazy in terms of Bitcoin. I don't believe I've seen Bitcoin rally so much before halving. But this, of course, is driven by what? New money from BlackRock and Bitcoin and all the whole host of Bitcoin ETFs, Fidelity, and all this also. So that's a new equation, new variable at play within this halving itself. So after halving itself, yes, I think DC, I think the very basic one, DC, I think there's a pretty sound kind of advice in terms of how you collect it itself. But of course, if you're more savvy, you can play around with options and also like some of the perps to have a more balanced delta neutral kind of like risk arbitrage strategies in a sense. Yeah.
Okay, we actually have one more question. Oh, okay. What is the main project Shield Team 6 is currently focusing on?
Okay, so Shield Team 6 is actually my own crypto kind of community that I have. We don't really focus on any project, but at the same time, it's more meant for just sharing different projects that I have. Those you can see some of them, those are more into the Bitcoin kind of like space now. They're into runes, an upcoming project itself. Again, not financial advice, but just sharing just looking at what they've been into. Runes is one thing. Like for myself, I'm more focused on building up my own project within the Solana space, which is a perpetuals aggregator, perpdex aggregator, because you can have 5 exchanges trading different perps. But what if one aggregator you connect to all 5 with a smart order router? I think that's one key thing. So yeah, these are some things actually we've been focused on.
Okay, there is one question that came through email. Do you potentially foresee a lot of flow out of the East? And if so, how would the dynamics change in the whole market?
So do I expect a lot of the flow out of the East, is it?
Yes, yeah.
Yeah, so honestly, maybe in the past 3-4 years, even especially after the I think during FTX and everything like this, right? Probably I'll say a lot of the smart money within China have found its way out of China already. They would have positioned into Bitcoin itself, but it is not so easy for some of the larger institutions in China to position into Bitcoin or any proxy of it. So I'll expect, for me, actually, I'll expect over the longer term there would be decent, sizable flows from the East, namely North Asia, China, like being positioned into Bitcoin via Bitcoin or even like Ethereum ETFs, because it may not be as easy like I think for some of these Chinese wealthy people or even regulated institutions especially them to kind of be exposed to cryptocurrencies. If you're a rich guy in China, sure, you may have different ways of getting money out and you can be invested in cryptocurrencies or Bitcoin, Ethereum. But for large funds or even large institutions, it's a bit difficult because everything you have to be reported. And China previously hasn't really been on a very friendly stance, with respect to Bitcoin and Ethereum. But if there's this ETF out, in Hong Kong somehow, it's like an extension of China in a way, regulatory wise, or even geographically as well. That is something that actually I will yes definitely expect. I think a lot of flows to coming from there. But then fast forward 2 years later, like this will be a very dynamic thing that I think that all traders, all investors in the market should kind of like observe. The balance out in the flows between the east and the west. How it could be as interesting as, hey, when actually a certain period of time in the year, maybe near the tax period, you see that actually there's outflows from the Bitcoin ETF. But that could be when you see, why the eastern side of Hong Kong there be a lot of inflows. So you see this whole flow and dynamic. I think that'll be interesting to see that once it's up, the Bitcoin and Ethereum ETF from Hong Kong.
Okay, we just got one more question from the emails. Will Bitcoin ever eventually be adopted as a widely used form of currency?
I would say, judging from where it's developing now, Bitcoin is still sufficiently decentralized. So meaning what? In terms of pushing out upgrades, it may not be as fast as it is because it's kind of decentralized in a way. But in the future, if with Lightning Network coming on, and in the future, I think that probably will have been a couple of upgrades planned out also. It stands a pretty good chance, but at the same time, you have to consider in the next 4 or 5 years, Bitcoin can improve until this certain magnitude. But compare 4 years ago and now, all the different other layer ones, that means other blockchain like even Solana, like Monet or whatever, or the Mantle itself, they're also very fast. In terms of how things can move. But the one thing that are lacking is the true decentralization of Bitcoin itself. How many people actually adopt it? So I'll say yes. Although challenges for it is that it will still be very hard for it to be really mass adopted. For the adoption level to increase over the next few years, yes, definitely. I think definitely will increase in terms of payment and everything. See, El Salvador is using it already. But for it to be mass adopted, that means like, oh wow, 1 billion or 2 billion people is using it pay every day. There's still some work needed to be done in stabilizing the whole network itself. So because currently I don't think it's fast enough to handle that many transactions. Yeah.
Okay, we have one more question. Is crypto really used to frequently launder money?
I would say correct. I know some may think differently, but I would say crypto similarly with traditional financial products. I think that's actually a misconception that crypto is mainly used to launder money. In terms of percentage wise, I think even traditional, like TradFi, we call it traditional finance. I'll say there's some data actually, quite a decent proportion, decent amount actually is being used to launder money compared to crypto. Why? Because cryptocurrency, right? Cryptocurrency actually itself, by its nature, is meant to be like anonymous, in a sense. So your amount that's sent everywhere. But now with travel rule coming up and everything is actually transparent. So it's anonymous, but it's transparent. So you can see, if you can actually steal from this, hack in this wallet, steal this money. But everyone is looking at you stealing the money online. So you can see how it's being laundered. They have mixers like Tornado Cash. That means you take the stolen money, put into that mixer, and they try to mix it around. But some of these are being cracked down also. So you see, it is increasingly becoming more and more difficult to launder money through some of these routes. And if you openly launder money, everyone's actually looking at you and looking at wallet trail, like going A, B, C, D, E. And I think institutions like a bigger stablecoin issue like Tether, if there's a basis for this money to be ascertained to be illegal, to be laundered, right? And it's USD Tether, you actually write a submit report to Tether, and Tether can freeze these funds. Not exactly 100% centralized, if you look at it, but these are all little efforts in kind of like stopping out all these kind of like laundering issues. So if you look at it, everything's 100% transparent on crypto versus in the real world, you can actually launder money through many different ways, physical ways, like buying gold here and there, that kind of thing. They may not have a track, like a cash trail, actually online currency trail in this way. You're using cash transact. So yeah, I'll say for crypto itself, it's pretty much a misconception that it's like exclusively used or even largely used for laundering money. Yeah, but too bad now. I think crypto itself is not used. I wouldn't say it's 100% used for laundering money or mostly for that, but many people are treating cryptocurrencies and even like digital assets like a gambling, trading, speculation playground. So that is unfortunately a fact as it is. But over time, I think the whole industry is trying to kind of improve on that aspect. Yeah.
Okay, if there's no further questions, we would like to thank Mr. Coby once again for his sharing today. And now we've come to the end of this webinar. Do keep up with all the latest happenings with us here at Orient Futures Singapore by following our social media pages here. or you can actually visit our website at orientfutures.com.sg. Thank you all for your attendance once again, and we look forward to having you at the next webinar.
Thanks, everyone.